Welcome back to the Dividend Diplomats YouTube channel. You got Bert the Herd over here, the man, the myth, the legend, and you're on with Big Al. And this was a big news for dividend investors and all investors alike, because one of Bert and my favorite iconic individuals had some big news.
Yeah, so before we get into it, put that Coke can on the subscribe button. Give us a thumbs up. Why am I talking about a Coke can? You guessed it, one of the legendaries, the big kahunas of the dividend.
Oracle
Himself. Yeah, we're here to talk about his major, huge dividend stock purchases and sales.
All right, who are we talking about? Who is the Oracle that made big headline news this week, Bert?
None other than Warren Buffett.
Warren Buffett made headlines this week. Usually he doesn't make as big of headlines, but for some reason, this was huge. A few reasons why, because Warren exited some large companies.
And he started some positions in some big-time dividend stocks, and these were not small positions either. They were large stakes.
So first we want to talk about the positions that Warren Buffett exited, that the Oracle of Omaha said sell, and then what he moved that cash into and pressed the buy button, or in the words of Jim Cramer, buy. Bert, what was the one big company that they completely exited?
Well, I mean, his largest position by far. He had a massive stake in Apple. So what he did was he didn't exit the full position, but he sure trimmed that position down, took some money off the top, locked in some gains, and started reallocating positions there. Also, though, Warren, like us, loves to buy undervalued stocks as well. So it makes sense that he sold out of Apple a little bit and trimmed that position, because their PE ratio is almost 28 based on their current metric. It's much higher than a lot of the dividend stocks that he purchased. But what else, Lanny? There was a certain sector that he also ran for the doors on, too.
You know, he was a big believer in JPMorgan Chase as well as Wells Fargo, ticker symbol JPM and WFC. So not only did he trim his position in Apple, which still is his largest position, though.
Yep.
But he also completely exited JPMorgan and Wells Fargo. Said, hey, even though your price to earnings, going forward looks to be undervalued, I'm exiting you. Wells Fargo had to destroy their dividend. JPMorgan is still on hold of increasing that dividend. So He said sayonara.
Yeah, he took his gains that he had from his investments in the banking sector and again just keeps reallocating it into undervalued dividend stocks. Are you seeing the theme? Overvalued stocks, less dividend growth, just transitioning them into these undervalued stocks that are still offering that dividend growth.
The last big move that Warren Buffett made was Pfizer. He said, I understand Pfizer did great work, but I believe because of that spinoff that they did, because of the change that they were going through and the questionable dividend going forward, Warren Buffett said, hey, I'm going to leave this healthcare stock, but the greatest part is he redeployed in some other healthcare stocks.
Yeah, unlike the banking sector where he sold a lot of his banking positions, he is sticking into healthcare because he believes in that sector.
So again, to do a quick recap, Warren Buffett sold part of his Apple position.
Yep, he trimmed and got rid of his Wells Fargo position, sold JPMorgan, and then he sold Pfizer too. And we'll put a link below to an article summarizing some of his other moves, because these were just some of the the major headlines for his sells.
So then Warren Buffett, he went onto YouTube, went to the Dividend Diplomats YouTube channel and said, what dividend stocks are on Bert and Lanny's stocks to buy or stock watch list for these upcoming months? Yeah, because I need to see what these guys are doing.
Yeah, he watched a video. He actually sent us a couple messages. We have a few tweets from Warren, a few voicemails, calls. He was talking to us a lot about Verizon, ticker symbol VZ. Yeah, of course we started buying Verizon, but that was old news. Lanny found this one a while ago. Their PE ratio was low. They had nice solid dividend growth, dividend yield. Currently, I guess, their PE is 12. Their last dividend increase was just over 2%, 4.4% dividend yield. Warren's like, hey, Lanny, fantastic job on that analysis. So what did he do?
He just said, hey, I'm going to add a couple dollars to my new position in Verizon. And it wasn't just a couple dollars. It was actually $8.6 billion.
Yeah, that's an insane amount of cash. And let's take a step back here, because this is what's really cool. It's now his 6th largest holding. So think about that. He put $8.6 billion to work, insane itself on its own, but it's also now jumping the position in this portfolio, and it's his 6th largest. Absolute insanity.
That's a lot of shares at a 4.4% yield. You do the math. I mean, actually, I'm going to do the math right now. 8.66 billion. So based on the calculation, Warren Buffett just added a cool forward dividend income of $378 million.
Yeah, he just eked us out from our last week's purchases, didn't he, Lanny?
Yeah, I added $2.51 from one share of Verizon, but he says I'm adding $378 million.
Yeah, thanks for that research, Lanny.
My God.
Yeah, that's an insane amount of money, but it didn't just stop there.
No.
Verizon was obviously the highest profile, but he also picked up another stock that we've been buying over the last few weeks. That company, Kroger, ticker symbol KR. So let's look at Kroger's metrics here. Why? Because they're undervalued. PE ratio is less than 12. Their last dividend increase was 12.9%. Thanks for that nice little bump up there, Kroger. And their yield is 2.13% at the time we're filming this, so it's above the market and above that terrible savings rate we're getting from Ally.
So when you think about it, Warren exited a lower yield Apple at higher valuation, exited Wells Fargo, pretty much no yield there, and said, hey, Verizon 4.4%, Kroger 2%. And he didn't stop there like Bert just said. He went into 2 more positions even outside of these 2 companies. And again, this ties in with the Pfizer position that he exited.
Yeah, so he left one healthcare stock and moved some of the money into Abbvie and Bristol-Myers Squibb. Abbvie is ticker symbol ABBV. I always struggle with saying the name for some reason. Their PE ratio is less than 9. Their last dividend increase was 10.2%. And yeah, their dividend yield's almost 5%. So moving from Pfizer with that little less certainty in the dividend until the spinoff is finalized, sure, let's move it into a cheaper valued stock, just a strong dividend growth rate and an even higher yield.
And then Bristol-Myers Squibb, again, has a below 9 times earnings or below 9 price to earnings ratio. Also had almost a 10% dividend increase last round, and they yield over 3.2%.
Interesting. Yeah. So again, 2 great healthcare stocks that are continuing to increase their dividend, move assets from the overvalued, overpriced ones, in his opinion, move it to those undervalued dividend stocks.
So from a dividend investing standpoint, how cool is this? Warren, made some difficult decisions, but also wanted to say, hey, let's add some cash flow to Berkshire. I mean, essentially, you think about it, Verizon, 4.4%.
Mm-hmm. Yeah.
Kroger, over 2%. And then, Bert, what was Abbvie and BMY?
4.9% and then 3.2% dividend yield.
So above average, greater than the S&P 500. All 4 of these positions at least were yielding greater than Apple, Wells Fargo. JPMorgan's kind of around there, and Pfizer obviously yields, right around 4%.
Yep, and here's what I love too about Warren Buffett. Look at the companies he's buying. He's buying the stocks that all of us are watching. He's buying these household names, these great legacy dividend growth stocks. He focuses on the fundamental, focuses on earnings growth, focuses on dividend yield. He is ignoring the noise in the news of, obviously there's all this massive with Wall Street bets, GameStop, all that. That's noise. He's focusing on these dividend growth stocks.
All 4 of these companies produce massive amounts of operating cash flow. And again, each one of these has many opportunities going forward as well. I mean, Verizon's got the 5G. Kroger's been a very powerful player during the pandemic. And again, their balance sheet is so solid because of the limited debt that they have. And then Abbvie and BMY continue to research and develop new drugs as well as around this growth path.
Yeah, it's fantastic. So it's great stocks that he is buying into. So let us know what you think of Warren Buffett's purchases. You tell us what other stocks that we didn't feature in this video did you like of his buys and his sells? Do they match the moves you've been making over the last few months like us?
I know a lot of people have been buying Verizon out there by reviewing our comments, as well as Abbvie. We know on our tweets and on our comments on the videos, a lot of Abbvie buyers are out there. So you're right in line with what Warren's doing, so congratulations.
Yeah, so please everybody, if you don't subscribe to our channel, please do so. Give this video a thumbs up so we can keep covering dividend news, what the Oracle's doing, and talking about the stock moves we make.
So whether you like what Warren's doing or what we're doing, we appreciate you for watching our video. Again, let us know how many stocks out of these that you own. I know I own Verizon, Kroger, and Abbvie. I think, Bert, you pretty much
it's about
got
the same. Yeah.
So again, We appreciate it. It's all about giving you news that's going to help you in your decision making as well as to keep you informed. This is Bert and Laney from the Dividend Diplomats.
Over and out.